Well, fellow Elon Musk fans, today is another sad day in our saga of Tesla. It was looking pretty good. I thought Tesla was really going to come through for us this time around because they had reported record numbers in terms of their manufacturing and deliveries, but it turned out in the end that wasn't enough. And the question was raised, how can it be possible that a company is selling more cars than it's ever sold, making more cars than it's ever sold, and turning less profit than it's ever had? Well, this might not be an all-time low miss, but you get the idea. I don't have any idea. I don't know how it could happen. Well, there's only one thing I can think of, and maybe that's that the cars are being sold for less than they cost to manufacture. Could that be? But what kind of company would run itself in a way where the cars are going to cost the consumer less than they cost to produce? That doesn't really make sense. And to try to make up for it in volume, now that is not a good business plan. And I can't imagine that Elon Musk, who's a multi-billionaire, and it's not a billionaire, you don't become a billionaire on your own just by making bad decisions. You need to know how to manage money, and Elon Musk does not sell cars for less than they're worth. It's just not possible. So what is going on with Tesla? Why is Tesla dropping in value after market up to 8%? I don't even know where it's at right now. I'm afraid to look. Maybe it's in this article. Let's scroll down and see. I'm over here on Forbes.com, everybody, if you want to follow along. Otherwise, look at your screen and you can see the story. Let's see where Tesla's at after hours. Oh, it's just whatever it is, they don't want to publish it here. That's all that it's ever made, and it's selling more of those vehicles than it's ever sold, but it's making less money. It's losing more money than it was before it started making and selling the vehicles. How is that well, maybe it has something to do with let me think about this. Maybe the vehicles were sold on credit and they're using cash basis accounting for their GAAP and non-GAAP measures. Could that be? They're sold on credit, so they're dealer financed, which is Tesla. Tesla marks them as sold and delivered, but the payments haven't started coming in. That could be. That's one reason. So this could actually be a great thing, because if interest rates can continue to go up, that means Tesla can get more money from interest on the cars that they've leased. So they're a bank and a car dealer, and that is genius. And not only that, but this is also exciting because it means that Tesla is going to be able to surprise the short sellers, because there's a mountain of income building up each time they sell one of these dealer financed cars. Now, I'm not saying this is what happened, everybody. Keep that in mind. I'm just saying it could be. It's a possibility, isn't it? I mean, how is it possible that a company's making more cars, selling more cars, delivering more cars, and earning less money? Please, any idea that you have would be much appreciated, because it's not making sense to me. Maybe there's something with the accounting. Maybe they miscounted something. Maybe they missed a zero. Maybe they added a zero. Mistakes do happen, but not usually in companies as well run, honestly, as Tesla. Okay, let's get to the bottom of it. Let's read in this article and see what they say. Best ever deliveries. Worse than expected loss, but it's only 389 million. That's not a very big loss, really. You know, so that, I don't know what the big deal is there. I mean, they were expecting probably a loss, I think. So Tesla hasn't made money. But they're planning to deliver up to 400,000 electric cars this year. So that's really going to be, I mean, if they continue losing at the rate they're losing now per car sold, but building up capital or building up future income, this is going to be a big deal, a really big deal 400,000. Wow. Wow, wow, wow. All right. Well, that's what we see about Tesla. Now I'm going to talk about what's actually going on, because I actually know this is all a setup. What's going on is short sellers are crushing the value of Tesla, even though the company is performing as expected at this phase, because they're a startup. They're not Ford Motors. This is Tesla. To expect them to just magically turn a profit when it costs a lot of money to build these cars is insane. But do you know what brings the price down? It's not the fact that they're not profitable. No, it's not that. It's not the fact that they lose money on every car they sell. That's a bogus line that's sold to you by one group of people, the group of people who are responsible for bringing the price of Tesla down. And I bet you're wondering, if you're still listening, who that group of people is, and I'm going to tell you. They're called short sellers. Have you ever heard of a short seller? Get your ASMR gear on, because I'm about to whisper it again. Short sellers are responsible for this problem. Short sellers have ruined Tesla's value, but only temporarily, because you know what happens with every short rally? A short squeeze. And when that short squeeze comes, which will probably be tomorrow morning, but it might be as late as Friday, when that short squeeze comes, we are going to be making money. When I say we, I just mean I'm unbiased here. I'm just saying the people who are not short are going to be making so much money, because this thing is going to explode higher. You know what I mean? Explode higher. If it goes down, let's say it goes down 20 or 30%. I don't think it will, but let's say it goes down 50 or 60% this week. If this thing short squeezes, it's going to be up 90%. I don't mean to say you. I mean to say, if it were me, I gotta go, guys. I gotta go.